Hello there. My name is Heritage Adisa, and this is the HFM Forex Trading Workshop. Today, we'll talk about what Forex trading really is, what financial market trading is generally, how it works, and how you can be a part of it. We'll go on to talk about the tradable assets, the instruments you can buy and sell, and then the tools that are required for you to get involved in Forex or financial market trading. The benefits of trading we're going to learn about, as well as even the risks, but not just the risk, the protection that we can enjoy when we trade in the financial market, and then who HFM is, our role as a broker, what we offer, and how we can help you achieve your trading goals as well. When we talk about financial trading or Forex trading, what exactly are we talking about? Forex trading or financial market trading has to do with the buying and selling of financial instruments, financial assets, all with the sole purpose of making a profit. The idea is based on information, I expect the price of an asset, maybe oil in this case, to appreciate. Right? I could buy it now that the price is still lower. And when the price goes up, I can sell it off at a higher price, making the difference. Right? The idea generally is profit taking. We don't get to deal with the underlying assets, but we get to take advantage of the price changes. Let me give you an example. Globally, for example, let's say for one reason or the other, OPEC, right, decides to increase oil production. OPEC decides to increase oil production. Now, by increasing oil production, basically they are flooding the market with more oil. And when supply is higher, under normal circumstances, price is expected to fall. Understanding this, I can say based on this information, based on the expectations, I expect the price of oil to fall going forward, right? So based on this, I can log onto the platform and then sell oil right now. And when the price falls, I can close out my trade, making the difference. So the idea generally is understand what is going on across the different asset classes and try to take advantage of the price changes by buying or selling. Just the same way you can walk down to the BDC guys and try to buy foreign currency, maybe USD physically, hold it, and when the value goes up, you can sell off at a higher price, making the difference. It's the same way you can also speculate in the markets. In this case, though, you don't have to deal with the physical assets, physical oil, physical currencies, but then you still get to speculate on the price changes, making the difference. Now, it's important to know that financial trading, Forex trading is speculative in nature. What it simply means is there is no certainty about where price is going to be at the end of the day. What you have is expectations, what you have is probabilities, and what you have is convictions. There is some level or some degree of uncertainty. The fact that I buy dollar right now doesn't mean for sure price is going to go up. Based on information, price is expected to go up, but there's a chance that price doesn't go up and then price goes against my expectations. In a case where I buy dollar, for example, and then price goes down against what I expected, I would be losing the difference. So it's possible to make a loss when you're speculating. Now, the idea is as a trader, yes, you understand that prices could go up and down, but by understanding what you're doing your research, understanding what price is supposed to do, right, there's a higher chance that price behaves the way you expect. In a case where price doesn't behave the way you expect and you experience a loss, there's what we call risk management, which we're going to talk about a bit later on during the course, which is designed to help you limit your exposure such that in a case where I'm wrong, whatever losses I incur will be minimal and well within my control. Now, apart from this, it's also important that you also note that Forex trading is a business. I don't like to just call it an investment because I'm not just putting my money somewhere, waiting for my money to work for me. No, it requires your active participation. It requires strategy. It requires planning. It requires records. It requires practice, patience, discipline to be able to perfect your business strategy and make the most out of the opportunities in the market whilst taking minimal risk. The idea is you don't want to, just have the mindset of fixed return. There is no fixed return when it comes to speculating in the market, right? But if you understand what you're doing, that's the business and how it works, you do what you're supposed to do as regards your research and you approach it properly, you could do a lot of good with Forex trading as well. In the market, financial trading has different traders around the world can buy and sell different instruments, trade different asset classes, but they need a broker to give them access. Hence, where HFM comes in. As a broker, we stand in the middle, giving you access to opportunities in the market. So, if, for example, you want to speculate in the market, buy and sell different currencies and other asset classes, HFM provides you the platform to allow you to do this. Just the same way you need a stockbroker to buy shares and stocks in the market, you need a Forex and CFD broker to buy CFDs on different asset classes. Now, when you hear me say CFDs and Forex, what I simply mean is the asset classes that we trade are called CFDs, which stand for contracts for difference. Contracts for difference. The idea generally is they are a form of financial asset, a form of financial derivative that allow you as a trader to be able to buy, sell different financial assets without owning them. So instead of buying dollars physically, I could trade the CFD that has the dollar. So basically, I don't have to deal with dollar physically, but I can still take advantage of the prices. If I want to buy Facebook shares, for example, I don't have to buy it physically. I don't have to go to the stock exchange and buy it. I can trade the CFD on the shares, hence taking advantage of the price changes without having to own the shares. Instead of buying barrels of oil physically, CFDs allow me to be able to speculate on the prices without owning it physically. That means that we can basically speculate using CFDs to buy or sell assets. I can decide to be on the buy side of the contract, or I could decide to be on the sell side. I could pick any instrument and decide to buy it because it's just a contract. I'm not owning the underlying assets. As well, if I expect the price to fall, I could pick any asset and decide to short or sell it as well because I don't own the physical asset. So CFDs offer you the opportunity to speculate on different asset classes from the same account, right? Allowing you to buy and sell, making profits either way, whether you expect prices to rise or fall. But you must have at the back of your mind that because CFDs basically track the price of the real assets in the market, for the CFD price to change, the price of the asset in the real market has to change. That means that as a trader, I must constantly do what we call market research, understand what is going on with the underlying assets on every single day basis, and then use that information to speculate in the market. You would remember I talked about the OPEC story and how OPEC looked to increase production and how oil prices are expected to fall on the back of that. Now, if I don't understand the story, I don't understand how it affects the real assets, in this case, oil, it will be difficult to trade CFDs because CFDs track the price of the real assets in the market, which is very, very important that as traders we have at the back of our mind. Now, finally, how do we make money? As traders, how do we make money? Whenever you're speculating, either buying or selling, you can make profit either way. Whenever you expect the price of any asset to rise, what you need to do is buy it now so that when the price rises, you can close your trade at a price higher than you bought it for and you'll have made profits. So when you buy, you want prices to rise. The difference between the open price and the closing price going higher is the profit you'll have made. But if you buy and price falls instead, the difference between the entry price and the closing price, now lower, would be the loss that you have incurred. On the other hand, when you sell, because in this case you're selling, the opposite is the case. You sell any asset, you pick any asset, a currency or whatever the case is, and you hit sell, right? You make profits if the price falls. I sell Euro USD, for example, as a currency pair at 1.12500. If the price falls to 1.12000, I would have made profit. But if the price rises after I have sold, I will be losing the difference. So simply, whenever you buy, you make profit when price goes up, you make a loss when price goes down. Whenever you're selling, you make profit when price goes down and you make a loss if price goes up. What are the different asset classes that you can trade? Well, you can trade a range of different asset classes, ranging of over 1,200 different instruments in the market. By the way, the market itself is open for 24 hours a day, Monday to Friday. That is, through the working days in the week, as a trader for the 24 hours in the days, you can buy, sell, trade any instrument at any time, right? It's also an extremely liquid market. That means that you would never be stuck with a currency pair or an asset. You would always have a counterparty for all your transactions. That is, if I want to buy Euro, USD, or oil or gold, there would always be a seller. I want to sell Facebook or Bitcoin or whatever the case is, there would always be a buyer. Now, you can trade currencies, what's popularly known as Forex, which is foreign exchange. But then when you trade currencies, you trade them in pairs. Currencies for different nations are tradable, ranging from major currencies like the dollar, the euro, the British pound, the Australian dollar, Canadian dollar, New Zealand dollar, the Japanese yen, the Swiss franc, ranging to other emerging market currencies like the Chinese yuan, the Russian ruble, the Norwegian krone, the Swedish krona, and so on, the South African rand, and so on and so forth. You could trade energies like oil prices, the UK oil, that is Brent crude, and then the US oil that is West Texas Intermediate. You can trade them. You can trade metals, precious metals, base metals. Precious metals like gold, silver, base metals like copper, platinum, palladium. You can trade them. Shares of international companies around the world, Facebook, Amazon, Coca-Cola, Pepsi, name it. You can trade them right there from the same account on your platform, on the platform. You can trade commodities like sugar, cocoa, coffee, right? You can trade bonds of government, the UK government bond, that is the bond, gilts rather, the EU bond, even the US 10-year bond yield, bonds. You can trade them. You can trade indices, global market indices, which are basically, stocks of companies collated, right? So instead of looking at all the individual shares one after the other, we could have an index that collates different shares. Let's bring it home. In Nigeria today, if I pick the share price of the different banks, Zenith Bank and Access Bank and UBA and Unity and all the banks, I put the share prices together and then I collate it into one index, calling the index the Nigerian Banking Sector Index. That's an example of an equity, right? So you have our index. So you have different indices across different asset classes, up to stock DMAs, ETFs, right? Up to 1,200 different instruments that can be traded. Mind you, coming back to Forex, if you're going to trade currencies, you trade currencies in pairs. It is always one currency against another currency. It's just like when you go to the BDC to buy currencies. You're not just buying one currency, you're buying one currency in exchange for another currency. The same thing in the market. You trade currencies in pairs, but you can trade multiple other assets as well, including cryptocurrencies as well. Now, apart from the assets, what are the tools that you need? Well, it's an online business. That means that you need an internet-enabled device, right? Be it a laptop, that's a personal computer, a mobile phone, a tablet. You need an internet-enabled device where you can download the trading platform, which can be the HFM app, because we have an app that you can get on the Play Store or Apple Store, or the primary trading platforms, which are the MetaTrader 4 MT4 and MetaTrader 5 MT5. You can use either one of these. Now, this is a general class or general video where I'm trying to expose you generally into the things that you need to know. We're still going to have trainings that run, online like this, or even physically, where we'll go into the details in more, more full-fledged, right? How to use the trading platforms, what to look for, and on and on and on like that. So you need a trading platform, you need the device, but most importantly, you need information. You see, as a trader, you can't trade without information. You have to understand the factors that drive the prices of the assets that we mentioned earlier. Are the prices expected to go up, or the prices are expected to go down? Understanding these factors can help you make a decision as to what you're supposed to do to that asset on the platform, either buying or selling. Where do we find this information? When do we go looking for this information? What type of information are we trying to find? And then how do we interpret the information? All these things are things that we're going to learn through the foundation course that comes in after this particular class. Having known the tradable assets and known the tools that are required, why exactly should you get involved trading Forex? Well, Forex trading offers you the opportunity to make money. And like a lot of people have had in the past, even you have had in the past, Forex trading can be very lucrative. But like every business, for you to enjoy the lucrativeness of a business, you've got to understand first how it works. When we trade currencies, we don't trade from whole numbers. It's not a function of, let's use Naira dollar as an example, trying to trade 360 Naira to 361 Naira to a dollar. No, you're trading the decimal places, you're trading the percentage points, the tiny price movement, the tiny movements. Now, these tiny movements provide good money for you. So you're basically standing the chance where you can trade any instrument, understand where price should go down or up, and make money. Let me give you an example. When we had COVID-19 coming, for example, right, it was a case where a lot of lockdowns happened, and then there was no movement. Ships were at the harbor, planes were at the airports, people were not moving, cars were not moving. Basically, the demand for petrol and petroleum oil in general would have basically become zero. And when there's no demand and supply continues, price is expected to fall. Understanding this information during that period of COVID between February and March of 2020, you could have sold oil prices and you could have made good money. After that, when prices continue to rise, after that, during the recovery phase, when things were getting better, lockdowns were being lifted, movements were increasing, demand for oil started to rise, prices would have been rising, was rising as well. All through from April downwards, price kept rising for oil particularly, as well as many other risk assets. If you had understood this alone, you could have made good money during that period. Now, making money in the market is not a function of big issues alone, like COVID-19 or elections. Little issues like economic data released on a daily basis, like comments and speech from key individuals in the market, like geopolitical developments, like what we had, I think, last 2 weekends, where it was the last weekend, I think, where we had the Wagner group in Russia trying to there was just this whole mutiny in Russia. That could be an issue. That in itself could provide opportunities, right? Data, we had one today as well, could provide opportunities. Your job is to understand these things, which you're going to learn if you go through the training program, the foundation class particularly, and then use this information that happens all around us to make money. We hear this information every day. We sit with it, we discuss it around. It's high time you take these opportunities and try to make money using it. Apart from that, trading doesn't really require you to break the bank to get started. You don't have to. It really doesn't require the biggest capital. Yes, capital is good, is important. But for HFM, I think the minimum deposit right now is around $5. So that means that from that upwards, yes, $5 may not be sufficient enough to trade, but it just gives you an idea of how low you can really start because of access to high leverage. That means that you don't have to commit the entire full sum to buy or sell any assets. You can contribute a little and then borrow the rest to still be able to take advantage of the opportunities. Hence, using little money to take big transactions, standing a chance to make more money, although you must remember that that also comes with big risk, which risk management can help you put at bay. It's not difficult to get started. If you simply go to our website, hfm.com, and register, in about 5 minutes, 10 minutes, you can get your account started and approved, even funded, right? So that means that you can easily get access, and then we offer free education to help you understand how to trade in the market. And yes, when you are trading, you incur costs in form of commissions and spreads, but these costs are relatively low. You can pay as low as 10 cents when you buy up to $1,000. Right? So basically, that's very low. And as well as traders, that is a benefit or an advantage for you as a trader because the market is online. Wherever you are around the world, you can trade, right? From wherever you are. So that means you can do this alongside whatever it is that you do. You don't have to be in a physical location to trade. And being that it's open for 24 hours, for 5 days a week, you can do this alongside any other thing that you're already doing. The high liquidity environment makes it such that you never get stuck with any currency or asset. There would always be a buyer, always be a seller. And whether prices are rising or falling, you can make money either way. CFD trading offers you that opportunity. Besides, you can buy different asset classes, trade different instruments right from the same account with even access to leverage. Apart from the benefits, There are some risks in trading. You're a speculator. That means that if you're wrong, if, for example, you expect the price of an asset to rise and you buy it, but then the price just doesn't rise and the price falls instead, you'll be losing the difference. So there's potential risk in terms of trading risk, where you could be wrong either by omission or commission and incur a loss. But then in the market, there are also protections that you can enjoy. Protections like determining the volume of the transaction. So I would only buy what I can afford. You can do that, where I would only buy or sell the amount that I can afford. You can also limit your exposure and say, on this particular trade, I don't want to lose more than $5 or $10, whatever the case is, thereby limiting your exposure in the market. You can do that. In the case of risk associated with the market, in terms of liquidity, maybe as a result of bank holiday or as a result of, you know, economic high volatility environment, economic data being released and all of that. And there's a lot of spike of volatility in the market where prices are basically moving very, very, very fast. Now, that also comes with its own risks. But as a trader, even this risk itself, right, also helps because when you manage your risk adequately, you trade appropriate volumes, which means that you're only buying what you can afford. And you also limit your exposure by setting what we call a stop loss, an instruction to stop your loss if price gets to a certain level. Even all these market risks also are limited. Technology risks or risk associated with your devices, the systems can also be limited as long as your risk is managed. Think about it like this. When you're driving, when you're driving, if you limit your speed, whether you forget the traffic light or somebody hops in your front while you're driving, or maybe your car starts to, overheat or whatever the case is, because your speed is under control, you can always reduce the damage that you could cause. But in a case where your speed is out of control, you're not managing your risk adequately, all these little things can become big deals. It's the same thing in the market. Do not overexpose yourself. Yes, you could feel very confident about a trade idea. You could feel very good about a trade idea, but you should always keep your risk minimal. We're going to learn about what risk management is, what stop loss is, how to manage your risk adequately in our classes. Now, finally, I want to talk about HFM. When it comes to looking for a CFD broker that you can have access to premium service, the best trading conditions, customer support or professional guidance, you need to take HFM. In Nigeria today, HFM has been the best trading platform of the year for 3 years running at the Banks and Other Financial Institutions Awards organized by Business Day. As a broker, we are multi-regulated across different countries around the world and ample registered as well in Nigeria today, right? We have multiple industry awards, and the team here are professionals in terms of customer support, here to make sure that you have the best experience in the market and guidance in terms of education to help you understand how to approach the market, what to do, and how to trade. Apart from that, we also mentor our clients, offer them the best tools, effective trading tools, reliability as a broker as well, and then tools and guidance and mentorship to help aid your growth in the business. While trading may not be easy because it requires a lot of work, research, analysis, discipline, patience, it can be very simple if you understand what you're doing. The best trading conditions, the best professional guidance, we are here serving as the platform that allows you to take your trades and take your financial position to the next level through CFD trading. We're willing to help you. And what I know for a fact is if you do what we ask you to do, use what we give you to use, and follow the steps that we outline for you, you will clearly see improvement in your trading. Not every business is difficult, but if you don't know how to do it, it becomes difficult. Trading is not so difficult, right? You need to understand how it works and approach it the exact right way, which is what we are telling you, what we are trying to help you do. Now, this is basically a very short one to help you understand generally what trading is about. A quick recap: the market is an online space where you're speculating. You can buy different currencies, different asset classes with the aim to make profits, right? When you're buying, price goes up, you're making profits. You're buying and price goes down, you're making a loss. Your selling and price goes down, you're making profits. Your selling and price goes up, you're making a loss. There are ways you can manage your risk to ensure that even if you're making a loss, the losses are minimal and well within your risk parameters. But then there's also a way you can do research, find information, and understand whether price is likely to rise or fall, so that most of the time you are on the right side of the market. You can trade Forex, commodities, shares, bonds, equities, precious metals, energies, ETFs, DMA stocks, and so on and so forth. Over 1,200 instruments in the market. It's open for 24 hours and it's extremely liquid. And then you can make money in the market. You have access to high leverage through low startup capital, right? You can trade from anywhere, make money buying or selling, high liquidity environment. Basically make money for yourself, right? Yes, it comes with risk, but you can also learn how to manage your risk and keep your risk minimal. And HFM is the best trading platform in Nigeria, and then you are in the right place. We're here to help you achieve your goals, help you do better in the market. Now, all I've said is just an introduction. From Mondays to Wednesdays at the HFM Education Center, located on the third floor of Rurala House, 90 Allen Avenue, Ikeja, Lagos. Right, you can walk in on Mondays to Wednesdays to run through the foundation class, where we're going to go in more detail about how exactly to do this and how to do it best. And then those of us in Port Harcourt as well, you can visit our office on the second floor, right, number 77 Stadium Road, right, Port Harcourt, number 77 Stadium Road, Port Harcourt. Those of us that are in other cities or can't make it down to these centers on Mondays to Wednesdays, 10 a.m. in the morning, you can also join online like this. By 3 p.m., your account managers assigned to you can send you the link. You join the training and you can also get started as well. To join the training, all you have to do is have an account and ensure the account is approved. Your account managers can guide you through this. The foundation class is designed to get to a level where you know exactly what to do in the market and how to get started. The reason why you open an account with HFM or you're even here listening to me this long is because you're looking for an extra source of income, something you can do on the side that can help you make money. We are here to help you do this through CFD trading. And while, it requires a lot of effort from your end, we can guide you to do it right and do it well. I'd like to see you in the foundation class, and I really, really appreciate you joining us to make the most out of this trading opportunity. Forex trading can be very lucrative, right? If you do it well, you can make good money. And we at HFM are equipped, are skilled, and we can guide you to do this and do this properly. Thank you so much for spending time with me, for listening this long. Really appreciate it. If you have any questions whatsoever, you can reach out to your account manager. You can go to our website, hfm.com, and then also chat with us as well. Or you could reach us personally through our support lines, right, which you get on the website, or your account managers directly. All right. Thank you very much for joining me up to this point. It's a pleasure. My name, once again, is Heritage Adisa, and I'll see you in the foundation class. Do take care. Stay safe. God bless you.